Start again. Good afternoon. It's great to have you with us this afternoon. We'd like to welcome you to our presentation on the Corporate Transparency Act, and specifically within this act, the beneficial ownership rules that I'm sure you've been hearing quite a bit about lately. We've had several questions from clients already on these new rules and wanted to provide this webinar to pass on some valuable information to everyone. There have been several blogs, info blasts, and emails from many different sources in relation to these new requirements. And many company owners, frankly, have been experiencing some confusion over what this all even means and who to turn to for information. There can be penalties involved, and it is something that everyone needs to pay attention to. Hopefully, we'll be able to provide some valuable insight for you here this afternoon. My name is Wayne Gilmore. I'm a shareholder in our firm's tax department. I'll be assisting with facilitating our webinar today. Also joining us today are our presenters, Laura Chilumba, who is our International Tax Practice Leader.
Hi, everyone, and welcome to our webinar today.
And Ileana Malinov, who is our firm's Tax Practice Director.
Good afternoon, everyone. It's a pleasure to have you with us today.
We'll have all participants muted during the seminar, but we'd like to encourage questions throughout. As you have questions, feel free to type them out on our question feature on the screen, and I'll be sure we get them answered for us. If we run out of time at the end of the seminar, we'll be sure to respond to each question directly if we don't get to it here this afternoon. We've also provided a link to today's materials on your screen. Feel free to download these if you'd like to save the slides. At the top right of the screen, you'll see a piece of paper with a paper clip. If you click on that, it will bring you to the slides and you can download to your computer very easily. So now, onto the webinar and some background information. So what is behind the Corporate Transparency Act and how did it originate? Most countries have a requirement to report information on individuals when a company is created. And believe it or not, until now, the U.S. has had no laws or regulations regarding reporting on individuals who benefit economically by doing business here in the United States. The U.S. has become one of the easiest countries in the world to which to hide assets. Many attempts at legislation for this issue have been made. None have really been successful until the Corporate Transparency Act was passed in 2021. With this, it's my privilege to turn the presentation over to our presenters and Ileana, who will be speaking to us first. Thank you.
Thank you, Wayne. So what is the Corporate Transparency Act of 2021? CTA for short was enacted as part of the 2021 National Defense Authorization Act. It was brief, 21 pages of a really large act, and as everything that is focused on national defense, it received a lot of support, and while it may appear to be a little bit too much and a little bit too invasive, we are here 3 years later, and the act is law, and many of us still need to figure out how to comply with it. So the purpose behind the Corporate Transparency Act was really to prevent financial crimes like money laundering, tax evasion, and other bad actor type situations, which are often committed through shell corporations. Broadly defined, these shell corporations or other opaque structures are legal entities that really don't have any business purpose. They don't have employees, they don't have customers or assets, but somehow they come up into existence to facilitate some sort of a transaction and can oftentimes be used for money laundering to sort of disguise or overcomplicate the flow of money by layering the shell companies on top of one another. So that is really what Congress was intending to tackle as part of a broad expansion on the anti-money laundering laws and compliance with various sanctions and regulations. What is going to be accomplished with the Corporate Transparency Act? So really, we are going to end up, hopefully, with a national database of information that outlines and includes all of the individuals who directly or indirectly own or somehow substantially control certain types of both domestic and also foreign legal entities that are connected to the U.S. Congress tasked the Financial Crimes Enforcement Network to administer and regulate this act. And some of you may be familiar with FinCEN, the Financial Crimes Enforcement Network, because this is the same government agency that also is tasked with compliance over foreign bank accounts, investment accounts, and other financial assets. And also includes certain forms that a lot of our contacts in banking and other industry fill out on a regular basis related to wire transfers, suspicious cash transactions, etc. So FinCEN knows what they're doing. They were the ones that were already equipped to handle this type of information. As a result of the Corporate Transparency Act, FinCEN had to write regulations that govern the compliance process related with the beneficial ownership reporting requirements. As I mentioned, the CTA in and of itself is a little bit over 20 pages, yet since FinCEN had to produce a substantial number of regulations to define previously undefined terms, we have listed for you a link here to frequently asked questions that are probably over 50 pages of frequently asked questions by now, as well as the small entity business compliance guide that FinCEN put out, which is also over 50 pages. So even though the law in and of itself is short, the regulations and the guidance continue to be updated and are going to prove to be somewhat extensive. The beneficial ownership reports will require information on the reporting company, the beneficial owners, and the company applicants. Those are three newly created terms that we're going to discuss in a lot more detail later in the presentation, so that hopefully one of the key takeaways for you here will be who is the reporting company, who are the beneficial owners, which can be a separate presentation in and of itself, and who are the company applicants. The information is going to be maintained and secured by FinCEN in a database called Beneficial Ownership Secure System, or BOSS for short. Our government loves its acronyms. And one of the key questions that we have been receiving over time is who will have access to the information in the BOSS system. So first and foremost, the BOSS system was designed for the federal agencies that are related to national security, intelligence, or law enforcement. Additionally, access to the BOSS system will be granted to state, local, and tribal enforcement agencies, but only if such access has been authorized by a court or of a competent jurisdiction. Next, access to BOSS could be granted to federal agencies that are acting on behalf of foreign prosecutors, judges, or law enforcement agencies pursuant to a treaty or an information exchange agreement between the United States and the foreign government. Access could also be granted as a direct request from a prosecutor, judge, or law enforcement agency in a trusted foreign jurisdiction. And finally, access could be granted to financial institutions to facilitate their customer due diligence requirements under the applicable law. However, this access will only be granted with permission by the reporting company itself. It is important to point out it is the reporting company and not the beneficial owner that is granting such access. So in some situations, this may be the same person who's the decision maker, and in other situations, there may be different people involved. So why should I comply with this nuisance of a law? Many of our clients are asking, do I need to file? Why do I need to file? I'm a US person, I have a small business, I have no plans of tax evasion or money laundering. The US government doesn't really or shouldn't be concerned with me, so what happens if I don't file? Well, in a true law fashion, they built some teeth into the Corporate Transparency Act, and there could be substantial penalties. So the civil penalty for noncompliance is $500 per day. However, it is supposed to be adjusted for inflation. So 3 years of inflation from 2021 to 2024 gets you to $591 per day, and there is no cap. And additionally, could be subject to criminal penalties for willful failure to report complete or updated beneficial information. And those are $10,000 criminal penalty and up to 2 years of imprisonment. And there's a whole nother tier of penalties that has to do with knowingly disclosing unauthorized information related to beneficial ownership, which could be up to $250,000 and 5 years of imprisonment, or if you are violating another law in addition to the CTA, it could be $500,000 in penalties and up to 10 years in jail. So the government means business in this case, and we hope that we will never have to explain the penalties again to any one of our clients. Now that I've scared you sufficiently with the penalties, what are the filing deadlines to come into compliance? For most of you on this call, this is probably situation number one when your entity was created before January 1st, 2024. The government knew that there's going to be quite a few questions. Their system was supposed to be ready on January 1st, and I think it was ready on January 3rd. I don't know of anybody who actually attempted to file a report on January 3rd, though. So they gave us a year to come into compliance, and the requirement is to file on or before January 1st of 2025. However, for companies that are created after January 1st of 2024, the government somehow thought that these people should be able to figure it out fairly quickly. So initially the rule was 30 calendar days from the earlier of receiving information that the entity was created, such as a registration, or the date that the Secretary of State provides on the certificate of existence once the entity is created. 30 days proved to be absolutely insufficient, so at some point before the 30 days lapsed, before January 31st, the government allowed an extension of 90 days. But theoretically, an entity that was created in the month of January 2024 by now should have figured out how to file its initial beneficial ownership report. Another situation applies to companies or reporting entities that, following the decision-making process that we will outline for you a little bit later, determine that they're currently exempt. If an entity is exempt for filing right now, but there is a change of circumstances and the exemption no longer applies, then the entity has 30 calendar days from that change to file its updated initial beneficial ownership report. And it's important to note that the extension of 30 calendar days to 90 calendar days is temporary. It is only for 2024. And as new entities are created in 2025 and later, we will go back to the original 30-day timeline. So this is a pretty big deal in terms of information gathering and information reporting. The government estimated about 33 million reports need to be filed. There's 33 million entities. I think some of the registered agents and other presentations that we have attended are actually mentioning numbers in the hundreds of millions. And then the government estimates that there's at least 5 million new entities established every year in the US. So you can imagine that this is a lot of reports, a lot of data management and filing. And as we will discuss later in the presentation, we recommend that you do not wait until Christmas to take care of that filing requirement. There are additional reports sometimes due. For many of you, this may be a once-in-a-lifetime event, but that is highly unlikely. So typically, an additional report will be due either when you discover an inaccuracy or when there is a change. And when that happens, you have 30 calendar days to file an updated or a corrected report. So what qualifies as an additional requirement? First, having any change to previously reported information about the company beneficial owners. So that may mean change of the beneficial owners, or it may mean change of the personal identifiable information of the beneficial owners. So something as simple as change of address, or something as simple as a minor child turning 18. Additionally, you can have changes caused by a deceased beneficial owner, to correct inaccurate information, or to upload an updated identifying document image, which may happen when your driver's license expires or you move to another state. So as I have alluded so far by outlining the reports, there are several different types. First and foremost, we are now dealing with the initial report, which is for the initial filing of a reporting company that was in existence prior to 2024, or a new company that was just formed. Then we have the corrections report to rectify an inaccuracy in a previously filed report. We also have the updated reports to update any information, and a new exemption report, which is an update to notify FinCEN that an entity that used to not be exempt now meets a certain exemption criteria and will no longer be subject to filing. And with that, I'm going to turn it over to Laura, who is going to walk us through who is required to file.
Okay, so now that we heard about the penalties and the CTA, now many of you may be wondering, am I required to file? So who is required to file? So the entities that are required to report are called reporting entities, and we have domestic and foreign reporting entities. For domestic reporting entities, think of your corporations, your LLC, or any other entity created by filing document with the Secretary of State or other similar officials. So if you have a entity that was formed or incorporated within the laws of the U.S. and they are registered with the Secretary of State, that type of entity will be a reporting entity, will be required to file these CTA report and reporting their beneficial owners as well. So if you have an entity that is created under the law of foreign countries and they are also registered to do business in the U.S. by filing document with a Secretary of State, they will also be subject to the CTA reporting. It is important to note that the registration or with the Secretary of State is also a key element. So for sole proprietorships or and general partnership that are not required, that are registered legal entity but are not registered with the Secretary of State, those are not required to report their business ownership information. So in other words, they are not reporting companies. Other entities like the limited partnership, the LLPs, LLLPs, or statutory trust and business trust, also those they have some FinCEN expert filings for those type of entities. And again, the criteria for the entities that are required to file the CTA reporting, you have to be an entity that is formed either under the laws of the US or a foreign country or like a tribal, but also registered to do business in the US. So this is a really good like flow chart that you can keep with you when to understand the who is required to file or not file. And first we start like under what law, and I'm not being a little bit duplicative, if you will, but it's really important to understand who is required to file. So under what law the entity was created. If it's under the U.S., do we have a corporation, an LLC, or entity organized with the Secretary of State? So if the answer is yes, there is likely to be a reporting requirement. The entity will be a reporting entity unless an exemption applies, which will cover as well. So if the entity is formed or created under the laws of a foreign country and the foreign entity doing business in the US is also registered with a Secretary of State, the entity will also be a reporting entity. So unless there is some exemptions, of course, it is important to note that this is not a matter of debating with whether an entity should have been registered or should be registered with the Secretary of State. As long as the entity, you may be doing business in the US, but you are not registered with the Secretary of State, there is no requirement as of today for such entity to file this CTA report because the entity is not considered a reported company. So it's really important to understand these differences. So now that we covered who is a reported entity, we also have some exemptions because you may be a reporting entity, but because you fall under an exemption from reporting, you will not be required to file this CTA reporting. Currently, we have 23 exemptions. We are not going to cover them all, but a few of them are on this screen here. We have SEC registered companies, bank holding companies, credit unions. You also have certain nonprofit organizations. And one key takeaway from this license list is if you have a reporting entity who is already exempt, but that entity has holding entity underneath, you also have to go through each of the entities within the structure to determine at the entity by entity level whether those entities are reporting entities. So, in other words, there is no exception for the holding company because the parent entity is exempt. So that just creates another level of a challenge, if you will. So this screen is a good summary, if you will, of the exemptions that are available for now. The ones that we're going to cover will be the large operating company and inactive entity. For a large operating entity, you have to meet these three criteria. One, you have to employ more than 20 full-time employees. You must have an operating presence at a physical office within the United States, and you also must have filed a tax return exceeding 5 million of U.S. source gross receipt in the previous year. So if you are an entity with 20 more than 20 employees, but you have all employees working remotely, you don't have like a physical office. And we see this a lot with inbound companies or like foreign entities where they may be using the address of their legal counsel or their tax advisor. You need to have a physical presence or an address where business is conducted. So that's really also important to understand. Another exemption for inactive entity, you have to kind of go through the six criteria that we have listed. Was the entity in existence on or before January 2020? Was the entity engaged in active business? So if the entity was not engaged in active business, if it is not owned by a foreign person, or the entity has not experienced any change in ownership in the preceding 12-month period, the entity has not sent or received any funds in any amount greater than $1,000 in the preceding 12-month period, and the entity does not otherwise hold any kind of type of asset, they will fall under the inactive entity exemption. The other key element to take away is a lot of the entities that are listed on the exemption list, the government already has some type of identifying information of the individuals who have control or ownership of these entities because they filed some type of other regulatory filings with the government. So that's why they're kind of like exempt because they already have the government already have sufficient information for the individuals who owns or controls those type of entities. So that's why they are on the exemption list for the most part. So now that we have covered the entities that are required to file this report, what type of information is required? So one thing is for the reporting entity needs to also disclose the beneficial owner. So the reporting entity itself will include basic information such as the legal name, the any trade name or the DBA name, the address, the jurisdictional formation, and also the tax identification number. And for each of the beneficial owner or company applicant, which will also define in a slide down the road, they need to include the name, the date of birth, and the address. And they also need to upload a non-expire identifying a copy of either like the driver's license, passport, or other approved document. So as you can see, this is pretty far-reaching, and people are very concerned with their personal identifying information. And we're also going to discuss at the high level. You can already see how it's going to be a little bit challenging to gather this information for some of organization like board member, or if you have a family office where people don't necessarily get along or they don't trust the person with this information because they don't know what they're going to do with having all those information in one place, right? So it's really important to not only understand what information is required, but how are you going to start collecting this information? And like Iliana was saying earlier, some of you may see this, may have to file the report more than once. So it's also important to think about systems or how you're going to be collecting updated information, which also brings into educating maybe like the HR people, payroll people, because some of them will be the grounds on the boots of collecting changes like somebody got married, they have a legal name change or whatnot. So it's important to really start thinking, yes, we have time until January 1st of 2025, but the challenge will be to identify who is the beneficial owner and how do we get the information so we can file a report that is accurate. So The CTA BOI also introduced what is known as a FinCEN identifier, which is a identifying number that can be used on any file report in lieu of the information that was listed on the previous slides, like the name of the beneficial owner, their address, their date of birth, and also their document like a passport or driver's license. So you and a beneficial owner is not required to obtain to apply for a FinCEN, but it can make the process easier and the tracking and also like the record keeping for record keeping purposes a lot easier because not only it protects the beneficial owner privacy, it also prevent access of information in event of a hack because we have to think about hacking when it comes to privacy and security, and also it allows for quick and easy updates of personal and identifying information across reporting companies. So in other words, you may have beneficial owners that are all beneficial owners of more than one reporting company. So you want to make sure that if they don't want, for example, to provide any information, they can apply for FinCEN identification number by providing their personal information, and all they need to provide to the reporting company will be the FinCEN identifier. And when it is submitted, FinCEN will be able to cross-check with the underlying number for the information that was submitted for the application of that number. So where to file? So right now, the web address is listed on the screenshot. It's fincen.gov/BOI, and there are two ways to file it. Really, one way, but one is using a PDF. You do it on your own time and your own pace. You save it and then you upload it when you're ready for your submission. And also where you can file directly, and both are directly. But one is you use the application online and you submit it on the FinCEN website as well. Okay, so who can file a BOI report on behalf of a reporting company? Anyone who the reporting company authorizes to act on its behalf may file a BOI report, and also like an employee or owner or third-party service provider. And when submitting the BOI report, the individual filers should also prepare to provide basic information about themselves, such as their name, email address, or phone number. Okay, so now we heard about a beneficial owner. So who exactly is a beneficial owner? So this is straight from the definition from the FinCEN website. A reporting company beneficial owner is any individual who directly or indirectly exercise substantial control over the reporting company or owns or control at least 25% of the company's ownership interest. And again, there's no limit on the number of beneficial owners an entity may have, and this is where it will be very important to consult with your legal advisor or your tax advisor to really understand your business and who the beneficial owners are, because it's not always clear as to who really owns the reporting company. And there's also a new term that was introduced as the company applicant. And who is a company applicant, or who qualifies as a company applicant? The company applicant, we can have a reporting entity can have up to two individuals. One being the individual who directly files the document that creates or registers the reporting company. Like for example, for 2024, and this is really for 2024. You created a company, you're using a paralegal or an agent, registered agent for your company. That person who register the reporting company is called a company applicant. And if it's different than the above, or you didn't use a legal counsel or somebody else, is the individual who is primarily responsible for directing or controlling the filing of the document by another person. So those are the company applicants. So with the BOI report, you also need to report the company applicant, but it's only required for entities that were created and registered on and after January 1st of 2024. So reporting entities that were created and registered with the Secretary of State prior to January 1st, 2024, they are not required to report their company applicants on their BOI report. So now that we covered the ownership, the other leg of the beneficial owner is the substantial control. So what is substantial control? An individual exercises substantial control over a reporting company if the individual meets any of the four criteria listed on the screen. Is the individual a senior officer? So if you hold a senior position within the company, like a CFO, CEO, think of like a president and anybody really holding those senior positions, that individual will be considered to have substantial control over the reporting company. If you have an individual with authority to appoint or remove certain officers or a majority of directors of the reporting company, they also have substantial control. Or you have an individual who is an important decision maker or an individual that has any other form of substantial control over the reporting company. So why is this important? We deal a lot with limited liability companies where you may have a lot of members and you may have a member who when you look at the structure, that member owns like 1%. But if that member, and because they own 1% at face value, they have less than 25% of ownership, and you may already discount them as not being a beneficial owner. But if you go to the LLC agreement and that person is an important decision maker, like for example, nothing can be made or some important decision can be made without the approval of that 1% member, guess what? That 1% member has substantial control and is now a beneficial owner of the reporting entity. And you also have to do an analysis when you think about substantial control of also understanding the indirect substantial control. And again, it's not always clear. So when you have somebody who controls more or more intermediary entities that separately or collectively they can exercise substantial control over a reporting entity, that person, although they may not have a direct substantial control, but because of the indirect substantial control, they will be considered a beneficial owner. And also, if you have some type of arrangement, either financial or even a business relationship with other individuals or entity acting as nominees, you may also have somebody who will be a beneficial owner because they have indirect substantial control. So we have a quick example here where we have Double X and LLC owned 40% by Claire and 60% by the Alex and Claire Trust and is a member managed LLC. Alex is the trustee of the Alex and Claire Trust. Alex can exercise substantial control over Double X in his role as trustee of the Alex and Claire Trust. So, and again, when you look at the trust, the 60% of the Alex and Claire Trust, but then you have Alex who doesn't directly own the Double X, but because Alex has substantial control and in his role as a trustee can exercise substantial control over the reporting entity Double X, Alex will be a beneficial owner of Double X, the reporting entity. So when we talk about ownership interest, what do we mean? So with the ownership interest, it's really true control of the ownership interest owned by either like another individual acting as a nominee, intermediary, custodian, or agent on behalf of such individual. We also have like a direct ownership, indirect or joint ownership with one or more other person over undivided interest. And we are not going to go through the details of the trust, but just bear in mind that ownership can also be through a trust or similar arrangement. And we just walked through an example that was with a trustee. But when you have like a trustee or other with the authority to dispose of trust assets, you have a beneficiary of a trust and also the sole permissible recipient of trust income and principal who has the right to demand a distribution or with the right to withdraw all the asset, or a grantor or settlor of a trust who can revoke the trust or withdraw the trust assets. So, and again, think about like through the ownership or control of one or more intermediary entities or ownership that separately or collectively own or control ownership interests of the reporting entity. So, and again, it will be very important to know your business, to understand the structure, to understand who are all the key players, and even those who don't necessarily look like key players may fall under the beneficial owner. So, for the exemptions, we there are some exemptions for beneficial owner, whereas you may be a beneficial owner, quote unquote, but there is an exemption. So, if you have a minor child under state law, as long as the reporting, so the minor child itself is not required to provide that information, but the reporting entity needs to provide the information of the parent or the legal guardian of the minor child. So if you have an employee of the reporting company acting solely as an employee and not someone as a senior holding a senior position, so you don't have like a senior officer, as long as the control or the economic benefits from the entity derive solely from the employment status of such employee. Or if you have an individual whose only interest in the company is a future interest through some right of inheritance, they are exempt as a beneficial owner. And a creditor of a reporting entity is not a beneficial owner. The creditor will not be required to be reported on a BOI report. An individual acting as a nominee, intermediary, custodian, or agent on behalf of another individual is also exempt as a beneficial owner. This is really like just a good slide to keep in the back of your pockets for when it comes to trust and trustees, and we kind of talked about it through our example in the previous slides. So the ownership interest, and again, when you look at your business or the structure, understanding the ownership, it is not always as clear as to what is the ownership interest and who are all the owners of the entity. So things that you have to look at to really understand the ownership interest, and that's why. And again, it's really important to consult with your tax advisor or your legal counsel for you to really understand the ownership interest to identify your beneficial owners so you can file an accurate report. You will look at things like the equity stock or voting rights or similar other instrument, regardless of whether they confer voting power or rights, and also if you have like transferable shares or voting certificates. And when you're dealing with LLC, you want to look at units like capital or profit interest, and you also want to look at convertible instruments. So somebody may not have any equity, like at face value or a unit, but is there something else that is giving rise to that person having been deemed as an owner by way of a convertible interest? Meaning, like, do we have any future right, warrants, or right to buy, sell, or subscribe, even if such warrant is a debt? And again, coming back to LLCs, because we deal a lot with LLCs where we may have like some type of waterfall agreements, also want to look through the agreement to really understand who are all the key players of the entity. And also kind of like a catch-all, like any other instrument, contract, relationship, options, or privilege. Really keep in mind, don't just stop at the equity or like the number of shares, but there's so many other elements that can trip up the ownership interest and resulting in somebody being treated as a beneficial owner. Okay, so now we are going to go through some examples for illustration purposes only. And those are pretty much like plain vanilla, if you will, but I hope they will give you somewhat an idea of what we just discussed, kind of like translate into in practice. So for this example, we have our corporation, Widget R US Inc., with 500 shares of stock. The reporting company here, we have this Widget Corporation. It is a U.S. entity that was formed again in the U.S. And we're assuming for the sake of this presentation that this entity was registered with the Secretary of State in Delaware. You pick the state. So this is a reporting entity. We have three individuals, A, B, and C, and each of them owns issued share of stock. Individual A owns 250 shares, so 50% of the ownership. We have individual B with 40% and individual C with 10%. Hopefully I did my math right. So, and then we also have individual D. Individual D does not own any shares of Widget R US Inc., but it is the president. So when you look at the chart, assuming there's no other convertible instrument, there's no other contract or agreement or something else, going on. At face value, when you look at the structure, your beneficial owners are individual A, B, and D. A and B because they own more than 25% of this corporation, and individual D, although individual D doesn't own any shares, but they have substantial control because they hold a senior position within the corporation as a president, so they are deemed a beneficial owner. And individual C does not have any ownership in excess of like the 25%, doesn't have at least 25%, and does not hold any senior position. So individual C is not a beneficial owner of Widget or US Corporation. So real quick with example number two, the key takeaway really is, again, when you're looking at the structure, you want to understand like separately, but also collectively, what is the ownership interest. And we're going to focus specifically on individual A. So we have now Widget Company, our US entity. We have company Y underneath it, and also company Z. We have the chairman. So the chairman, because of his position, holding like a senior role within the entity, like within the board, that person would be a beneficial owner. So individual A collectively owns more than 25%, at least 25%. But if you're only looking at it from like company Y, you may discount that person because they do not hold 25% of the interest. So you really have to also look at the structure, really understand the key players as far as like collectively how much interest do they own, and also what the substantial control do they exercise, so that they can be considered as a beneficial owner. So I guess one of the key takeaway, everybody is a beneficial owner unless you can prove that they are not. I think that's more like the safe side to look at it. With example number three, this is also like a common structure where you have Widget LLC, but they also have real estate, and for business purposes, they do not hold the real estate within the LLC. They have a separate real estate LLC, and Widget LLC also have single member LLC underneath. So for this example illustration, let's assume Widget LLC is exempt, is a large corporation with more than 20 employees. They have a physical presence here in the US, and they have a gross receipt on their last US tax return of a 5 million US source income, so they are exempt. So the LLC underneath, you have to do the same analysis. So if the LLCs underneath are not exempt, or they're not large corporation or large operating entities, they will be subject to the CTA because they will be considered reporting entities. So that's another point to keep in mind, as when you look at a structure, you want to do it like entity by entity level. And then the B will not be a beneficial owner for the CTA reporting. So that's pretty much it for this example, but we also have some other illustration, and I'm going to hand over to Iliana to take us through.
Thank you, Laura. This was very informational. So to us, the first three examples seem to be not very complicated. I realized sitting as a participant, in the webinar and not as a presenter for that part, that maybe not everybody deals in organizational structures, tax returns, K-1s, and other relationships the way that we do in and out. So if you had any questions on these examples, if the structures resemble something that maybe your current business is structured as right now, it may be good to talk to your legal advisor or to just chat with us. We are not really allowed to do beneficial ownership classifications as part of a legal determination because CPA firms are not allowed to practice law, but we are allowed to help with compliance requirements and answer questions that are not extremely controversial or fact dependent. So anyways, if these structures seem simple to you, great, we can move on together to this example, which we kind of called the new normal. Because this example of a structure was created from the previous example, from example 3. Many of you are running successful companies and businesses, and you engage in certain asset protection structures or estate planning or opportunities or generational planning. And a quick structure of two people starting a business together may quickly evolve into something like this. And here we have a couple of different types of trusts. We have the president, the CEO, we have real estate, we have an operating company, we maybe have some kids that are beneficiaries of one of the trusts. So there's multiple players involved. There's different types of beneficial ownership requirements that can be triggered here as you walk through the ownership percentages, and there's more than one reporting company on the slide. So if somebody wants to put this into practice and figure out who the beneficial owners are, you can email us and then we can see who got it right. There's no raffle, but we can create one. And then another chart of another new normal. This is a somewhat possibly typical structure if you're trying to replicate a business across multiple, let's say, states or franchises where you have all of these separate LLCs on the bottom that are owned by the same people, but they are separate companies because of asset protection or liability reasons. And then you have operating company, and then you have outside investors, and you don't always know whether your outside investors are related to one another. You can quickly see how this will also become extremely problematic. And if you wonder why, our leader of the international tax practice was doing this presentation that affects also all of our domestic clients, it's because I think it becomes exponentially harder when you're dealing with international clients with different entity types that we may not necessarily know what they mean and how they're controlled. And you can see how the complexity just quickly escalates, and legal advisor help is really recommended at this stage. 6 months may not be enough for some of the structures. So why are we having this webinar in April? Why didn't we have it in January? Well, in January, we didn't have a lot of guidance, so we shared with you the guidance. And there was also a court case now that has moved through the court system in northern Alabama. And this is the National Small Business Association versus Secretary Yellen in her capacity as Secretary of the Department of Treasury. So in this court case, it was determined that the CTA is unconstitutional, that Congress has exceeded the powers that the Constitution intended for them. And it's kind of interesting to read the first few pages of the court case just to see how many constitutional amendments the plaintiffs believe the CTA is violating. So we'll see how this plays out. But as of right now, the CTA is not enforceable with respect to the plaintiff in this case, who's a member of the National Small Business Association, and then by extension also because the National Small Business Association represented the plaintiff. It's also not, it's not enforceable to anybody who was a member of the National Small Business Association as of March 1st, 2024. So maybe this affects some of you on the call. For everybody else, though, this is law and the clock is ticking. And we don't know if and when and how this court case is going to be decided. As we said earlier, FinCEN continues to add more questions to the FAQs, and they are expecting to start a pilot program in the spring now that maybe facilitates and makes the filing a little bit easier. Interestingly enough, this morning I got an invitation or an update from FinCEN about their webinars. So if 1 hour of punishment for you right now was not enough, 2 o'clock Eastern time, you can go on YouTube and there's going to be a recorded webinar that FinCEN itself is putting together to explain hopefully the same things we were explaining. We'll see. We will watch it and see if there's any additional key takeaways to share with you. We also wanted to caution everybody that some states are expected to follow the federal CTA guidelines, and New York, for example, has already instituted its own BOI reporting requirements for LLCs in particular. And I think that there's something moving through California as well. So they may be the next state to add their own reporting requirement. So how can we help and why are we doing this presentation? So really CTA compliance falls in no man's land, and I think that anybody who you have talked to, except maybe your legal advisor, has really been hesitant to provide any sort of advice or assistance. So far, we have come up with 4 options how to tackle this. The first one is do it yourself. If you have a relatively uncomplicated ownership structure and you don't have an exorbitant number of entities in your control, maybe you can do this yourself following the PDF form and the link that we shared earlier in the presentation. Especially if there's not a lot of change in ownership or change in circumstances, this may not be as daunting of a task as it may be for others. You can also use an online service. I think I Googled that the other day. There's probably more than 20 that pop up, however many the first hits are on Google's first landing page. Bear in mind, this is in existence since 2021, and this is the first compliance period. So please exercise some sound judgment and scrutiny if you decide to share your personal identifying information with an online service that maybe has not existed for a while. I'm not saying that you shouldn't do it, right? Because we can't provide an opinion on the data security of any one of them. There's just always bad actors. I always caution some of our clients, there is 100 links out there to apply for an employer identification number online or for an ITIN online. There's really only one way to do it, and that's irs.gov. Everybody else, you're sharing your information with a third party. So just be cognizant of that. Work with your attorney, as we bring up legal counsel multiple times through this presentation, and there's a reason for that. They help set up the companies. They already have a lot of the information associated with the reporting companies or the beneficial owners. They probably are all working through their own processes on how to comply with the CTA. If not for companies that were in existence before 2024, then certainly for companies that they're helping create now, because they could be considered company applicants. And then coming soon, we really wanted to be ready for this webinar, but unfortunately we're still not. How can we help you? And why are we even in the mix here? We receive multiple questions from many of our clients, so we are still trying to evaluate whether this would be a one-time service that we can offer to our existing clients. The reasons are simple. We believe we have an established relationship based on mutual trust and appreciation for what we do and mean for one another. We also have some of your pre-existing information. For many of you, we probably have all of your pre-existing information related to ownership, except maybe for your IDs. We don't collect that information. So we are really trying to figure out where we are allowed to assist in this process and how to do it with reasonable fees. Unfortunately, we have been cautioned multiple times that it is not our place to provide beneficial ownership advice, even though there's a couple of places in the FAQs where FinCEN itself says talk to your accountant, or there's references to the Internal Revenue Code talking about constructive ownership, ownership by attribution, and other different tax code sections. So it almost sounds like this may need to be a team effort between legal counsel and accountants, unless some of you are already filling out your BOI reports online as we're talking, which is great. So what can you do now while you wait for us is let us know if you're interested. Obviously, if there's a demand, if the demand for this service continues and the confusion continues, then we have to take a harder look and figure out how we can assist our clients. Stay tuned for updates. If we offer this service, there would be an additional engagement letter with specific language that needs to be signed surrounding the beneficial ownership determination. Consult your legal advisor, and if they offer this service, that may be a very good route to go. And then also begin gathering the information that we've shared with you, because one way or another, you're going to need it, right? IDs, list of entities. We're particularly worried about entities that are disregarded or inactive, because maybe we don't have those entities on our current client list because they're not tax filing entities. So that's where we really need to have an open dialogue with you as our clients. And here is our contact information for all three of us, or feel free to contact anybody from the HLB Gross Collins family that you talk on a regular basis with as your advisor. And we've established a new email for general inquiries, cta@grosscollins.com. This is a monitored inbox. There will be a human answering your questions. So whichever way you decide to contact us, we are here for you, and stay tuned for an update. With that, I'm going to turn it over to Wayne. He's going to facilitate our Q&A session. He's been quiet so far, monitoring the chat box and making sure that, in the remaining 2 minutes that we have, we can answer at least a couple of questions for you.
Of course. Ileana, Laura, thank you so much. This has been very informative. We'll move on to a few questions. There's several here in the question box, and some of them are very fact specific, and we definitely won't get to those within the next 2 minutes, but rest assured, anybody that sent anything to us will be back with you here shortly. But just a couple quick ones here. Ileana, the first question states, the BOI report, is it required to be filed annually every year, or is it just a one-time filing?
That's a great question, Wayne. Thank you so much for it. So this is an initial filing requirement right now, and how many updates you have to file depends on how many changes of circumstances you have, whether it's changes with the company or changes with its ownership. But there is no statutory annual filing requirement coming every December 31st for you.
Gotcha. Very good. Laura, we saw that rule regarding a large operating company being exempt if it employs more than 20 employees and has gross receipts on the tax return exceeding $5 million. So if a company has been in existence prior to 2024 and meets these criteria, would an initial filing even be required, or can they just skip over that since we've met it?
They can skip over it since they made it because they are meeting the exception, so they are exempt from the filing.
Very good. Ileana, if a tax professional files a BOI report on behalf of a tax client, is the tax professional considered the company applicant?
No, we will not be a company applicant. The company applicant is specifically related to somebody who facilitates the formation of the company in its initial year. If the tax professionals do decide to facilitate these filings, we will just be an authorized third party.
Very good. Laura, another question. What is the difference between a beneficial owner and a company applicant?
So the beneficial owner is someone who either owns at least 25% of the reporting entity or exercise substantial control. And the company applicant, like Ileana just stated, it's somebody who will help either register the reporting entity with the Secretary of State or facilitating the legal filings for the entity.
Gotcha.
Yeah, and the reporting, the company applicant is only applicable starting with 2024. For entities that were created prior to 2024, they do not have the issue of the company applicant.
Got it. And time for one more. If a company is owned by two LLCs, do you use the LLCs for BOI, or are the owners of the LLCs used?
That's a good question. So if a company is owned by two LLCs, you most likely have more than one reporting company to worry about, right?
Yes.
And then ultimately the goal of this is to look through the ultimate beneficial owner with substantial control or substantial ownership. So you will report the entire chain of ownership up to the individuals if they meet the tests that Laura previously discussed.
Wonderful. All right, and everybody else that has had questions here, we'll definitely get back to you here very shortly. On behalf of everyone, we'd like to thank you for being with us this afternoon. Like Ileana pointed out, for any further questions or guidance, we have our email there. We'll all monitor that, or feel free to call us or email us directly as well, up there as well. Wayne Gilmore signing off. Hope you all have a great afternoon, and thank you so much.